Welcome to a deep dive into the world of Chewy. Yeah, we've got a ton of research that you've sent over about Chewy Inc., the online pet supply place, and we're going to help you sift through it all, see if this company is something you want to add to your portfolio.
It's awesome to be here, and I think it's not about just, throwing a dart at a board and seeing what sticks. We're going to look at how Chewy's doing business, how they manage things,
Yeah.
their financials, and even, try to get a sense of the overall market sentiment.
Okay, so let's unpack this Chewy box, shall we?
Yeah.
I mean, essentially, they're an online pet product supermarket, right?
Yeah, that's a great way to put it. I mean, you can get almost anything there for your pet, whether it's furry or feathery or even scaled. And we're talking over 3,500 different brands. And it's not just limited to products for dogs and cats. You've got fish, birds, reptiles, all sorts of critters covered.
So they're aiming for that one-stop shop appeal, kind of like a pet-themed Amazon, if you will.
Yeah, convenience is definitely a big part of their strategy. But what sets them apart is their laser focus on customer service. They've got 24/7 support personalized recommendations. And get this, they even send handwritten thank you notes. So it's not just about transactions for them, they're building relationships.
Handwritten notes.
Yeah.
Really? In this day and age? That's impressive. I bet that contributes to their crazy high customer retention rate. I think I read somewhere that it's over 90%.
Yeah, you're right. That's incredibly high for any industry. And their autoship program plays a big role in that. Customers can set up recurring deliveries for essentials, things like food or litter, which guarantees consistent revenue for Chewy. Just imagine 9 out of 10 customers coming back to you month after month. That's the kind of loyalty Chewy has managed to build.
Their autoship program is pretty genius, if you ask me. Makes life so much easier for pet owners and creates this predictable revenue stream for Chewy. It's a total win-win. And then they have Chewy Pharmacy, too, which adds a whole other dimension to their business.
Exactly. It really solidifies their position as this comprehensive pet care provider. And speaking of the broader picture, the pet industry itself is exploding right now. More and more people are treating their pets like family, and they're willing to spend serious money on their health and well-being.
Yeah, I've definitely noticed that trend. So what's the outlook for Chewy within this growing market?
Well, the global pet care market is projected to reach almost $500 billion by 2030. And Chewy is really well positioned to grab a big piece of that growth, especially as pet care continues to move online.
Okay, that makes sense. Now let's talk about the folks running the show. Sumit Singh, the CEO, has been at the helm since 2018. He even led them through their IPO back in 2019. He's got a pretty impressive background in e-commerce, doesn't he?
Oh, absolutely. In fact, he held some high-level positions at Amazon before joining Chewy, which could give them a real advantage when it comes to navigating the online retail world. And you got to give him credit for his adaptability. Think back to the craziness of the COVID-19 pandemic. Under his leadership, Chewy scaled up their fulfillment operations really quickly. And they prioritized those essential products. They were able to meet that surge in demand.
Yeah, that's a good example of operational agility for sure. So would you say that Chewy's leadership is generally considered trustworthy and transparent?
Well, they've got a dedicated investor relations team. They publish really detailed financial reports. And they hold these regular earnings calls. So transparency definitely seems to be a priority for them, which is always a good sign for investors.
Makes sense. All right, let's follow the money trail now and dive into Chewy's financial health. Their market cap is sitting around $14.03 billion right now. And they've seen some really strong revenue growth in recent years.
Yeah, that's encouraging. But the real question is, are they actually profitable?
Good point.
Well, the good news is they finally achieved profitability in 2023. But it's worth mentioning that their earnings have been a little inconsistent in the past. So the trend is positive, but it's something to keep an eye on for sure.
Got it. So profitability is a relatively new thing for them. What about their price-to-earnings ratios?
Their trailing PE ratio is 37.47, and the forward PE is 29.85, which tells us that investors are expecting continued growth, but those numbers are higher than the industry average, so it's important to understand what's driving that valuation.
Yeah, high growth expectations, but potentially priced for perfection, as they say. I'm guessing they're not paying out any dividends yet.
No, not at this point. They're likely reinvesting those profits to fuel future growth. And speaking of reinvestment, they're also actively managing their debt. Their debt-to-equity ratio is 2.29, which means they're using debt strategically for expansion. But that's another thing to watch, especially if interest rates start to rise.
Absolutely. Debt can be a double-edged sword. What about their overall financial stability, though? Are there any red flags?
Well, they're making good progress in optimizing their working capital. They're focused on managing inventory more efficiently. and improving their cash flow. Those are all positive signs for their long-term financial health.
So we've got a good handle on Chewy's business model, their leadership, and their financials. Now let's see what the rest of the market thinks about them. What's the general sentiment around Chewy as an investment?
Overall, it's pretty positive. Analysts seem to like their strong position in the online pet market, and they see a lot of potential for continued growth.
So would you say they're the top dog in the industry?
Well, they're definitely a major player. The average price target from analysts is around $40.05, which implies about an 8.45% upside from where the stock is trading right now. That's a pretty bullish outlook.
So the analysts are feeling good. But what about actual investors? Are they putting their money where their mouth is?
There are a couple of things that suggest a growing investor confidence. For one, short interest has been declining. Basically, short interest is like betting against a company. So when it goes down, it means fewer people are betting against Chewy, which is a good sign.
Yeah, that makes sense. So less negativity floating around. What else are you seeing?
Well, they've also had some positive news recently. They just revamped their retail media network, which is a smart move to attract more advertisers. And they're expanding into veterinary services, which makes a lot of sense for a company focused on pet care.
It sounds like they're not just resting on their laurels, they're actively innovating and finding new ways to grow.
Exactly, which is crucial in a competitive market like online retail.
All right, so now let's take a look at who owns Chewy. Can you break down their ownership structure for us?
Sure. It's a mix of institutional investors, private companies, and individual insiders. You've got some big names like BlackRock and Vanguard among their biggest institutional holders, which tells you that some pretty serious players see value in Chewy.
So it's not just small-time investors. There are some heavy hitters involved. But you mentioned something earlier about concentrated ownership. What's the story there?
Well, one company, BC Partners Advisors LP, holds a pretty substantial stake in Chewy. This isn't necessarily a bad thing, but it's something to be aware of. It means they have a lot of influence over the company's direction. So you might want to do some research on them, see what their track record and investment philosophy are like.
Good point. It's always smart to know who's steering the ship.
Yeah.
Okay, so we've talked about the good stuff, but we need to be realistic about the risks, too.
Yeah.
Every company has them right.
Of course. No investment is completely risk-free, and a SWOT analysis is a great way to identify and assess those risks. SWOT stands for strengths, weaknesses, opportunities, and threats.
Got it. So let's start with Chewy's strengths. What are they doing well?
Well, they've got great brand recognition. They've built a strong reputation for selection convenience and great customer service. And that focus on the customer with things like the auto ship program and personalized recommendations, that really sets them apart in a crowded market.
Yet that auto ship program is a real game changer, like a recurring revenue machine. And I'm sure their fast and reliable shipping helps keep customers happy, too.
Absolutely. They've invested a lot in their fulfillment network to make sure deliveries are smooth and efficient, and their community engagement is another strength. They're active on social media, they support animal shelters, they even send out personalized gifts to customers on their pets' birthdays. It's all part of building a community around pet owners.
That's smart, building those emotional connections with customers.
Oh.
So they're doing a lot of things right. But even the best companies have weaknesses. What are some areas where Chewy could improve?
Well, one vulnerability is their reliance on third-party suppliers. They don't actually manufacture their own products. So any disruption in the supply chain could impact their ability to get products to customers. And then, of course, there's the competition. They're up against some giants like Amazon and PetSmart. Those companies have deep pockets and vast resources.
Yeah, competition is always fierce in retail, especially online. What else is on the weakness list?
Managing inventory for thousands of products across all those fulfillment centers is a big challenge. And while they have a strong presence in the U.S., their international footprint is still pretty limited. They've made a start in Canada. But there's a huge global market out there.
True. Expanding internationally could be a big opportunity for them down the road. Any other weaknesses to consider?
Well, economic downturns are always a concern. When people start tightening their belts, pet spending might be one of the first things to go, and they're constantly facing pressure from competitors to lower prices, which can squeeze their profit margins.
Okay, so they need to be adaptable and adjust to changing economic conditions. Now let's flip the script and talk about opportunities. What are some areas where Chewy could grow and expand?
Well, I already mentioned international expansion. That's a huge opportunity to reach new customers and boost revenue.
Seems like a no-brainer. Go where the pets are.
Exactly. They could also expand their product offerings, maybe move into things like pet insurance or wellness plans. Those are high-margin businesses that could complement their existing products.
Yeah, it makes sense to offer a wider range of services. Become that one-stop shop for all things pet-related.
And they could really leverage technology to enhance their services. They already have a great website and app, but they could explore things like virtual consultations with vets, or create an even stronger online community for pet owners to connect and share advice.
I like it. Staying ahead of the curve and anticipating what customers will want next.
All right, last but not least, let's talk about threats. What are some external factors that could hurt Chewy?
Well, the biggest one is the intense competition we've been talking about. They need to keep innovating to stay ahead of the pack. And as more players enter the online pet retail market, they could run into saturation, which would limit their growth potential.
Right. It's a tough market. What else should we be thinking about?
Economic downturns are always a threat, especially for a company selling things that people don't absolutely need, and they're not immune to regulatory changes, especially when it comes to pet food safety or waste management.
Yeah, those regulations can be a pain. And they can add unexpected costs to their operations. Exactly. And finally, supply chain disruptions are always a possibility, whether it's natural disasters or global events. Anything that disrupts the supply chain could make it harder to get products to customers.
So they've got to be prepared for anything. Economic storms, supply chain issues, you name it.
It's a lot to manage.
It is. But they've shown that they can be resilient and adaptable. The question is, can they keep that up as new challenges emerge?
That's the million-dollar question.
And that's a great place to leave it for now. We'll dive into that question even deeper in the next part of our deep dive. But first, a quick word from our sponsor.
Okay, we're back. Ready to wrap up our Chewy deep dive. I feel like we've gone through a lot.
Yeah, for sure. We've covered their business model, their financials, how the market feels about them, even potential risks.
It's been a wild ride, and it's all been to help you, our listener, make a smart decision about investing in Chewy.
That's right. We've given you a full picture of the company, but ultimately the decision is yours.
So let's bring it all together. What are the key takeaways? Well, the bottom line is Chewy is a strong company. They're in a growing industry. They've built a loyal customer base. And they've got a leadership team that's shown they can adapt and handle challenges.
But there are some things to watch out for too, right?
Of course. No investment is perfect. They've got tough competition, both online and in stores. They could be impacted by economic downturns. And there's always the chance of supply chain problems.
So their success will depend on keeping those customers happy, staying ahead of the competition, and navigating all those external factors.
Exactly. And here's the big question for you. Can Chewy's focus on customer loyalty and convenience be enough to compete with giants like Amazon? And will they keep growing at such a fast pace?
That's what it all comes down to. And remember, this is just the beginning. The research you sent us was great. But you can always go deeper into areas like management or competition. You might find even more insights.
And don't forget the bigger picture. How will things like people treating pets, like family rising healthcare costs and the move to online shopping affect the industry? And how will Chewy adapt and innovate to stay on top?
It's a fast-changing environment. They need to keep evolving. So with all this in mind, would you invest in Chewy?
We've given you the information. Now it's up to you to make the call. And remember, this deep dive was made just for you based on what you sent us. If you want to learn about other companies or industries, just send us your research. We'll help you figure it all out.
And don't forget to subscribe to Stock Analytics AI on YouTube for more deep dives and market breakdowns.
And just a quick reminder, we are not financial advisors. This isn't investment advice. Our goal is to give you the information you need to do your own research and make your own decisions.
Always do your homework, talk to a financial professional, and make sure you're comfortable with the risks before investing in anything.
Thanks for joining us on this Chewy deep dive. We hope you found it useful and interesting.
And remember, the best investment you can make is in your own knowledge. Keep learning, keep researching, and keep exploring the world of finance.